Welcome to this week's Market Update, where we review the key developments that shape markets, highlight what drove our recent performance, and look ahead to important events on the horizon. Let's start with what moved markets. The big story continues to be artificial intelligence, where the world's largest technology companies show no signs of slowing down. Projected spending among leaders like Amazon, Alphabet, Meta, Microsoft, and Oracle is now approaching $1 trillion. Oracle just raised its capital spending plans, a strong vote of confidence in long-term demand. Investment booms typically fade when key players pull back, and that simply is not happening today. For our portfolios, this supports continued opportunity across semiconductors, cloud computing, data centers, and software. Job market also continues to show real strength. Unemployment claims came in at 229,000, and while that was a modest weekly increase, claims remain well below historical averages and below where they stood a year ago. Economists attribute the week's modest uptick to temporary seasonal factors like summer school schedules and the various FIFA World Cup events. The bigger picture is an economy that keeps generating jobs, supporting household incomes and consumer spending. That healthy foundation flows directly into the earnings power of the companies we own and supports a constructive outlook for both stocks and bonds. Producer prices rose in May at the fastest pace since late 2022, driven mainly by energy and transportation costs. While inflation always grabs headlines, this report carried an encouraging message. Businesses continue to invest, supply chains remain active, and demand tied to data centers and AI infrastructure stays robust. In other words, prices are rising partly because the economy keeps expanding. For long-term investors, resilient business investment and ongoing innovation remains a supportive backdrop for earnings growth. Now let's look at what drove our performance this past week and why we remain confident in our positioning. Coca-Cola was our top performer, gaining 6.13% as investors embraced dependable, high-quality businesses. The company's iconic brands, proven pricing power, and steady cash flows make it a natural destination when markets look for reliability. Coca-Cola has delivered consistent results across every kind of economic environment, and its diversified global portfolio allows it to adapt as consumer preferences shift. It is exactly the type of resilient, world-class business we want in portfolios. The financial sector led our performance with strong gains across our holdings. Royal Bank of Canada rose 3.74% on excellent quarterly results. Fairfax Financial gained 5.08%, and JP Morgan and Bank of America added solid returns. Strong earnings, healthy lending, and stable credit conditions are powering the sector, while wealth management and capital markets activity keeps growing. With robust balance sheets and diversified revenue streams, our financial holdings are well positioned to keep delivering through changing conditions. Our value strategy was the week's strongest contributor. Holdings like Fairfax Financial, Bank of America, and Lockheed Martin combine durable earnings, strong free cash flow, and attractive valuations, exactly the qualities investors are rewarding right now. This shift toward value reflects a healthy focus on profitability and balance sheet strength. It also validates one of investing's most timeless principles. Buying quality companies at reasonable prices is a reliable path to long-term success. Looking ahead, here are the key events we're monitoring in the weeks to come. On Wednesday, the Federal Reserve announces its latest interest rate decision, along with updated economic projections, with rates currently at 3.5% to 3.75% after 3 consecutive holds. April's meeting minutes showed several officials see rate cuts becoming appropriate once inflation resumes its path lower, so any signal on timing could lift both stocks and bonds. Wednesday also brings May retail sales. April's report showed a healthy 0.5% gain, with online shopping, electronics, and dining out all rising, a sign consumers remain confident and engaged. And Thursday's jobless claims gives us our most timely read on employment. Recent figures of 229,000 remain low by historical standards, pointing to employers holding on to workers and households staying on solid ground. As always, we remain focused on helping you achieve your long-term financial goals through disciplined investing and thoughtful portfolio management. Thanks for joining us, and we'll see you next week.